Welcome back everyone, and in this video, we're discussing the 3 stocks that Warren Buffett just bought for his Berkshire Hathaway portfolio. Buffett is one of the greatest value investors of all time, and he added 3 new dividend stocks over the latest quarter. And for all 3 companies, we're going to take a look at their current financial position and go over some reports to see what Wall Street analysts are predicting for their future growth. And the 3 dividend stocks that Buffett just bought include Verizon, Chevron, and Marsh McLennan. So we can see that the Oracle of Omaha purchased 3 very different companies that all have nicely diversified operations. And if we take a look at the numbers, Buffett purchased $8.6 billion worth of Verizon stock, his largest purchase over the latest quarter. He also took a $4.1 billion stake in Chevron and around a $500 million purchase into Marsh McLennan. And before we take a look at these 3 companies more in depth, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button and subscribe to the channel for those daily videos. And right now, we're going to start off with Verizon, one of the largest communication companies in the world, and is now the 6th largest holding in Berkshire's portfolio after the $8.6 billion buy. They trade under ticker VZ for around $57 per share. The company's current market cap is at $224 billion, and they trade with a very high dividend yield of 4.64%. And the company's current forward PE is at only 10.7, which is extremely low, and there's a ton of value in Verizon at this current price point. And Simply Wall Street shows that this company is 53% undervalued at this current level, and the estimated fair value per share is at above $116. I personally believe this is a very optimistic share price level, but overall, you get the idea that analysts believe this company is undervalued at this current level. And going forward, Verizon does have some long-term growth ahead with the new push into 5G. And over the latest quarter, the company posted strong earnings, cash flow, and increased wireless service revenue. And if we take a look at the full year of 2020, their total revenue only declined 2.7%. In a year with a global pandemic, when many sectors of the market were completely decimated, they showed how resilient this company is. They reported a slight decline in year-over-year revenue, but their cash flow saw a massive increase. Their cash flow from operations in the full year of 2020 came in at $41.8 billion, up from $37.5 back in 2019. And their free cash flow numbers grew from $17.8 all the way up to $23.6 billion over the full 2020 fiscal year. So again, it shows that even through some tough times in the market, this company will continue to operate, generate revenue, and increase free cash flow, which is great for investors. And if we take a look at some analyst reports, we can see that over the next 12 months, we're expecting over 12% share price growth from Verizon. At this current level, the company is actually considered a hold. There's 3 strong buys, 7 buys, 18 holds, and 1 single sell. So Warren Buffett bought into the company right now, but many analysts are actually putting a hold on Verizon at this current level. And going forward into 2021, we're expecting annual revenue to grow at 3.7%, followed by 5.6% by year-end 2022. So slow and consistent growth from this leader in the communication sector. And if we take a look at future earnings growth, we're predicting 5.6% year-over-year expansion, and from where we are today, slowly and consistently grow year over year for many years in the future. And right now, when people look at Verizon stock, they're not in it for a massive share price appreciation, but rather the extremely high dividend yield that this company provides. And if we take a look, the current yield at this price point is 4.64%, and that dividend only makes up 50% of their net income. So overall, that gives them a lot of money to retain back into the company to grow operations, plus it gives them more room in the future to grow that dividend payment to investors year over year. And right now, the company's 5-year dividend growth rate is at 2.2%. So nothing crazy, but your income is going to grow and match inflation each and every year. And this high current dividend yield comes with a very safe dividend safety score. Their current ranking is at 87, representing very safe and extremely unlikely that we see a dividend cut coming for Verizon anytime soon. And with this high yielding stock, it has a very low beta, so not a lot of share price volatility when you hold this big name communication company. So they were the first stock and the largest position that Buffett added over the latest quarter. He purchased 147 million shares of Verizon, and that equates to an $8.6 billion buy into this big name high dividend stock. And now if we move on to the second company that Buffett just bought, we're going to take a look at Chevron. He purchased a $4.1 billion stake into this large energy company. And if we take a look at the share price chart, they currently sit at around $96 per share. The company's market cap is at $179 billion, and they trade with a forward PE of 26.6. And at this current level, their massive dividend yield is coming in at 5.5%, which is absolutely incredible. And at this current level, the company is expected to be trading at a massive discount. If we take a look at a Morningstar report, their estimated fair value per share is at $112, representing a 20% discount at this current level. And if we also take a look at Simply Wall Street, they're predicting an 18% undervalued mark right now as well. So overall, with Chevron trading below $100, there is still a ton of upside to hit the fair value estimates from many different Wall Street analysts. And going forward, this traditional big energy company is making investments to grow in the renewable space as well. And they recently purchased a stake in a young renewable startup that is focused on geothermal energy. And right now, we all know that 2020 absolutely decimated the energy sector. So this company, Chevron, had a very rough time over the trailing 12 months, but overall, analysts are predicting a massive rebound going forward. If we take a look at the report, that represents an 11% upside over the next 12 months in the share price, and the company is actually rated as a buy. 3 strong buys, 14 buys, and 10 holds, and no one is selling out of Chevron at this current point in time. 0 sells and 0 strong sells is a very good sign. And if we take a look, annual revenue for 2021 is expected to pick back up 27%, and over 2022, we're expecting a total of 40% annual growth in their total top line revenue. Of course, it has seen a massive decline as of late, so these rebounds are only going to bring them back up to pre-pandemic levels. And taking a look at their earnings, we're forecasting 43% annual growth, which again, you have to understand is only going to bring them back to where they were before the pandemic. The company was forced to take some net losses over the last few quarters, and we can see going forward, we're only expecting the revenue and earnings to climb back up to closer to where they were at the peak of the company's success. And at this current level, they still offer a very high dividend yield of 5.54%. Their payout ratio is extremely high if you're taking a look at net income because the company has posted some net losses over the past few quarters. And their average dividend growth rate is at 3.8% over the past 5 years. And even though the tough times that they're going through, Chevron's dividend safety score comes in at 65, representing a safe dividend. So that means over the short term, we're not expecting a dividend cut over the next 12 to 24 months. So that kind of gives you some reassurance that if you want to kind of get some yield at this current level, the dividend may still be sustainable at this current point in time. And overall, if you want exposure to the energy sector and you believe there's going to be a rebound going forward and there's a value mark in this sector right now, then definitely take a look at Chevron. If Buffett's buying in with a $4.1 billion position, he definitely sees some upside in this company over the next few years. And now finally, if we take a look at the third name that Buffett bought into over this latest quarter, that is Marsh McLennan. The smallest position he purchased valued at only $500 million. But overall, that is still a big buy for Buffett over the past few years when he really hasn't been deploying too much capital into the markets. And if we take a look, ticker MMC currently trades at $117, and over the past 1 year, they are in the red by 3.6%. But over the past 5 years, by far, they've had the best performance out of Buffett's 3 buys, growing 102% overall. They trade with a forward PE of 21.5, and their current dividend yield is at 1.62%, with a market cap just above $58 billion. So Marsh McLennan is a financial company that operates in 2 main business segments, which are insurance and consulting. And they've been around for a long period of time, and the company was founded back in 1871. And at this current price point, they're estimated to be 4.3% undervalued with a fair value estimate of $119 per share. And over the past few years, they've seen some strong financial performance. They have a 10-year CAGR on revenue at 5%. Their operating income CAGR is at 10% over the past 10 years, and their earnings per share is growing at 11.7% over the past decade as well. So very strong performance year in and year out. And going forward, the dividend continues to grow at a nice rate as well. They've seen 11 consecutive years of dividend increases, and they purchase more and more shares as time goes on. And they are forecasting strong growth in many of their business segments over the long term as well. And if we take a look, the company is actually considered a hold at this current level: 5 buys, 12 holds, and 2 sells. Over the past 6 quarters, they've been consistent, beating earnings per share expectations, and over the next 2 years, we're predicting 5% annual revenue growth, followed by 10% by year end in 2022. And we're expecting the company's earnings to grow at 15% per year over the next 3 years in the future as well. And if we take a look at the chart, over the next 3 to 4 years, we're expecting continuous slow growth in both the top and bottom line going forward. And right now, the company's current dividend yield is at 1.6%, making up 35% of their overall net income, which again is very sustainable and leaves a lot of room for future dividend growth. And over the past 5 years, they've been growing their dividend at just below 9% averaged each and every year. And at this current level, their dividend safety score comes in at 63. So over the short term, no worry about a dividend cut coming from Marsh and McLennan. So this was the third big company that Buffett bought into over the latest quarter. And his total investment into the 3 companies we discussed in this video was over $13 billion. And that's not all he bought. The 3 stocks we went over were his 3 biggest buys over the past 90 days. But if we take a look, he also bought more of AbbVie, Merck, and T-Mobile. And AbbVie and Merck are 2 high dividend companies as well. AbbVie's current yield comes in at 5%, and ticker MRK or Merck comes in with a 3.5 current dividend yield. So 2 pharmaceutical companies that Buffett added to his existing positions. So over this latest quarter, Buffett was a buyer. We saw some dips in the market, and he continued to load up on some high quality blue chip dividend paying stocks. And now we're going to wrap up this video, everyone. So thank you for watching to the end. I am the Gen Z Investor. Every single day we talk about the stock market, so please hit that like button and subscribe to the channel for daily videos. I appreciate you for watching, and see you in tomorrow's episode.